How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing. Always protect your profits. We also got to put in the disclaimer. I'm not a financial advisor and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. So today we're going to be talking about Discovery stock. This was requested from one of my subscribers and I'm like, you know what? We'll cover it today. There has been some recent news that came out in regards how they're going to be working alongside with AT&T. They're going to be bringing over Warner Media to Discovery. But hey, we'll get into all of that. But before we get started, we're going to be going over an agenda. If you're new to this channel, I just want to let you know we also have timestamps down below in the description just to make navigation easier. But if you are thinking about making an investment in Discovery or you're considering a position, I suggest you watch the entire video. So what we're going to be going over is an article talking about what's going on with Discovery, and there's been so much news, there's been so much buzz, and we've also seen a pullback in the stock price. We also know it was a part of that scandal with Archegos and so forth, but we won't be talking about that. We're seeing where the current price is at. That's what the article is covering. So while we're going through that, of course, I'll be giving my analysis on top of it and giving my opinions. And then when we get through that, then we're going to be doing a technical analysis. This stock has definitely been on a roller coaster ride. We also do know there's a lot of volatility inside the market. And many of you are going to ask me, hey, what is a good price to actually buy that? I don't want to overpay, and I completely understand that because I'm just as cheap as well. So I'll be covering that in the technicals. And then when all of that is done, I'll be giving you guys my final thoughts. So let's get into it. So we're now on Yahoo Finance, and we're going to be going over this recent article, and this is in regards to Discovery. Is now the time to pull the trigger on Discovery stock? This analyst says yes. By now you've heard the news. AT&T is planning to split off and merge its Warner Media business home to HBO Max of Game of Thrones fame with Discovery Inc. and its Discovery Plus media properties. In the company's announcement released Monday morning, AT&T and Discovery said the combination will form one of the largest global streaming players, combining Warner Media's premium entertainment, sports, and news assets with Discovery's leading nonfiction and international entertainment and sports businesses to create a premier standalone global entertainment company. From AT&T's perspective, the deal will essentially split AT&T into two companies. Rump AT&T will receive $43 billion in a combination of cash, debt securities, and Warner Media's retention of certain debt to help it become one of the best capitalized 5G and fiber broadband companies in the United States. Meanwhile, AT&T's media properties, HBO and etc., will spin off to join with Discovery to become a pure play content company with one of the deepest libraries in the world. This pure play company, yet to be named, says the parties will come into existence when the deal closes in mid-2022. Shortly thereafter, the companies anticipate the media company to boast $52 billion in annual revenue, adjusted EBITDA of approximately $14 billion, and an industry-leading free cash flow conversion rate of approximately 60%, which appears to imply annual free cash flow on the order of $31.2 billion. Once it has achieved its target of at least $3 billion in expected cost synergies annually. Unsurprisingly, it's a newborn media conglomerate that investors are fixating on today, with Barrington analyst James Ghost, for example, lauding its vast assets in scripted plus unscripted television content and its $20 billion in annual spending on new content. The combined company, says Goss, will include the top television studios in terms of output, the #2 film studio, and a suite of content spanning sports, news, and family and scripted and unscripted content, boasting significant U.S. market share and also a substantial international presence that can reach consumers in over 200 countries globally. This would all make for, says Goss, in a significant understatement, a highly attractive streaming product. And I definitely agree here. They're definitely feeling the pain, I should say, from Netflix and as well as Disney. They've definitely made some tremendous strides in regards to their streaming, and they definitely want to compete here. Let's continue. Accordingly, even though current Discovery shareholders will control only 29% of the shares of the combined media company, Goss is reiterating his outperform. So a buy rating. Rating on Discovery shares and his $50 price target on those shares. To watch Goss's track record, you can click here. Speaking of those shares, Goss points out that one advantage of the merger will be significant simplification of Discovery stock as a three-class Discovery common share structure is collapsed into one. This one class of Discovery stock, by the way, is on track to earn only $2.95 per share this year, down 8% from 2020 when most of the world's population is stuck at home watching TV. By 2022, however, the year of the merger, Goss anticipates that Discovery will be back on a growth path with or without HBO, at all earning $3.50 per share and thus growing its profits nearly 19% year over year. And to kind of take that into consideration, that is just over the amount that you actually earn on the market, because that's usually around 12 to 15%. So that's why he's saying, hey, Discovery definitely has a lot of upside here, especially when the combination is completed in mid 2022, because they're going to have a large amount of assets, a huge amount of content and so forth. So this is why I wanted to bring it on your radar. But let's just finish this off. In terms of Discovery Street consensus, analysts are split amongst right down the middle. Out of 15 total analyst ratings published in the last 3 months, 7 say a buy while 8 suggest a hold, making the consensus a moderate buy in addition to the average price target of $47.71, which amounts to 39% upside potential. So what they mean by this, they're saying it should be at around $47.71 a year from now. So that's how we got to look at these analyst price targets. So that kind of sums it all up. Wanted to bring it across on your radar. I'm definitely going to be patient when it comes to Discovery, but I do see it at the current prices being a good entry point, because they were putting together a solid streaming product before this was actually announced, and they were seeing some success with that. They've made a recent transition and trying to adopt and catch up with the times. So I would honestly say, looking at the current price, it's not bad for a starter position, but definitely have a dollar cost averaging approach. So we're going to be doing a technical analysis for Discovery. So let's see how it actually performed on Friday. So ended up closing the day at $31.47, being down 1.19%. On the low, it tested $31.36, and then on the high, testing $32.35. So as we take a look at the chart, we want to see how well is it lining up with our indicators. So we can see it is well below the 200-day, the 100-day, and as well as the 21-day EMA. If we take a look at the RSI down below, it is at 22. So what does this mean? This stock is definitely oversold here, but it can provide an opportunity if you believe in the long-term prospects. But one thing we also got to take in mind, it is definitely showing a bearish pattern, and that's why I see that there could definitely be a potential of more downward pressure in the overall price. So if it decides to ever pull back, then I'll be looking out for areas here right around this 29.70 level, and another area to also look out for if it decides to pull back even further will be here right around $28. One thing to also do keep in mind of the fact, if it does decide to reverse, we want to see it come back to reclaim the 21-day EMA and have some momentum to at least get back up here to the 100-day. Price targets are right around this $48 level, or just a little bit lower than that. So since that's going to be actually a year from now, and if you do believe that there is upside in Discovery, especially with what they have going on as far as merging media assets with AT&T, then one thing to also understand of the fact that this does provide a great opportunity, and as far as the return is concerned, it is going to be better overall than what you'd get on the market if you're going to be investing in an index fund. So taking all of this into consideration, I would be patient here, wait to see if it decides to pull back. Do not go in heavy, use a dollar cost averaging approach, and then just sit and wait and see how the market actually performs, and also seeing how their other earning reports come thereafterwards. If we see consistency on the earnings reports and things are looking good, then of course this will be reflected with the stock price. If not, then there will be a lot more downward pressure, and of course as investors we got to be able to make a right decision from there whether we want to keep this in our holdings holdings. But for the most part, it's looking bearish. It could pull back even further. But if you do look at the RSI, it is definitely oversold here, and it can be due for a reversal. So for my final thoughts for Discovery stock, I'm going to be loading up when it's under $30. The current price of where it's at, I'm not saying that it's really expensive, but I just want to add below 30. Another thing we also got to take into consideration here, as far as a new entity that's going to be built between AT&T and Discovery actually is going to have about 29% to be exact, while AT&T will have 71%, and we're going to figure out, they're going to tell us what that's going to be, but that's not going to be happening till next year. But taking into consideration Discovery alone, they have been doing a fairly good job actually growing their subscriber base. But part of the reasons why AT&T and Discovery have joined to do this, they want to battle other streaming services like Disney, like Netflix, and so forth. And the fact is, they have so many assets. There's so much content under this umbrella for both of these companies. I feel like it's going to be a monster. We also did see when Discovery did decide to pivot and get more so and focus on their streaming, they've seen a little bit of success with that, but what we need to see on the balance sheet and on future earnings report is that improving. If there's improvements and it's happening on a consistent basis, then the stock price will go up. This is part of the reasons why I'm not surprised it has a price target right in that $40 area. And if we look at where it's at currently, there's definitely some upside there. So if it's able to get to 40, you are still beating the market within a year period of making your investment. Also do understand of the fact, even outside of this deal, I feel like Discovery, even at that price where it's at in the 30 range, I still feel like it's not that bad at all, or it's not even overblown. But I myself personally, I'd rather get it below 30 in that 20 range. I'm looking out for actually $28 to be exact. But for the most part, this is actually great to see, and we'd like to see more competition out there on the market, because what does that do? That gives us improved services. But for the most part, this definitely does look good for Discovery, and as well as AT&T overall in general. But since we are focusing on Discovery here, if you were thinking about getting into a position, I do see some upside, but for myself, I'd rather not actually add right now, but I'm going to be waiting until it hits below $30. Hope you guys enjoyed this video, and we'll be talking real soon.